What the return of IPOs tell us about the market. If you enjoy following financial markets or news, you've likely read or heard that Reddit, one of the largest online forums, could be gearing up to go public and offer its shares. This provides us with the opportunity to bring up a topic that hasn't been widely discussed in recent years, or at least hasn't been one of the hottest topics: IPOs. Since late 2021, there has been a significant reduction in the number of IPOs. Nevertheless, this year, several companies are contemplating whether to take the leap into public trading. Some of the most renowned companies planning to go public in 2024 include important names: Reddit, a social media platform where users can share and discuss content on various topics; Turo, a peer-to-peer car-sharing platform that allows individuals to rent out their vehicles to others; the Airbnb of cars; Stripe, an online payment processing platform that enables businesses to accept payments over the internet; Shine, an online fast fashion retailer offering trendy clothing and accessories at affordable prices; Chime, a company that partners with regional banks to provide certain fee-free mobile banking services. An IPO, or initial public offering, is the process through which a privately held company transitions to being publicly traded on a stock exchange. It involves allowing individuals and institutional investors to purchase ownership stakes in the company. The IPO also involves hiring investment banks to underwrite the offering, conducting regulatory filings, pricing the shares, and marketing the offering to potential investors. However, all of this is done with a clear objective: to allow the company to access greater capital, and naturally, the idea is to obtain as much capital as possible. In other words, to sell the shares at the highest price possible. As you can see in the previous graph, during periods of high IPO supply such as 2020 and 2021, the market encountered significant resistance, whereas in more challenging years like 2008 to 2009, the market received fewer IPOs. The market appears to be normalizing the number of IPOs received, with some names standing out and generating significant hype. With current valuations at historical highs, it's worth remembering the importance of exercising caution. The return of IPOs may present an opportunity to invest in companies with growth potential, but it's also crucial to consider the risks associated with elevated valuations. Investing and trading in IPOs. One of the most common questions regarding IPOs is whether it's possible to make money with them. The answer is naturally yes, but historical evidence shows that investing in them may not be a great idea. In multiple studies and articles, we can find information about the historical performance of companies that have recently gone public. For example, studies from Nasdaq have indicated that 3 years after their IPO, almost 2/3 of IPOs are underperforming the market, with most, 64%, more than 10% behind the market's returns. However, while the outperformers only represent around 29% of the total IPOs, they outperform by much more, on average, with some doubling or tripling in price. In other words, IPOs, in most cases, are flops. However, if you manage to pick a good company, the performance will be significantly better than the market in the medium term. An important point is that a significant portion of the movement is concentrated solely on the first day of trading, with significant swings that explain much of the return over the year. This means that it makes sense to trade them on the first day if you're looking to make a short-term profit and to avoid those companies in the subsequent days. So, should you invest in the Reddit IPO or any others? In short, evidence shows that most of the time we should avoid IPOs. However, it's also possible to trade them, and in the short term, it's possible to take advantage of their volatility, especially on the first day. Furthermore, a hot IPO market can indicate that the downside risk increases. The rise in hype for new IPOs is a useful indicator for measuring market sentiment.